Hi, welcome back. You're watching Trading Hour. Over to Manisha now, who joins in to talk about all that's happening in the commodity corner. And today, the focus is on metals. Hi, Manisha.
Thank you for that, Sumaira. Well, I'm looking particularly at precious metals because we have seen a very smart rebound overnight. I remember last week it was a sell call, short maybe this festival season on gold. But all of those headlines seems to have turned around because we've seen 8% of a gain in silver overnight. Gold was up 2%, platinum was up 5%. And this is because of the US dollar and the treasury seeing a decline. The UN calling for central banks to go slow on their aggressive rate hikes is the news that really made all the difference here. And then you also had the US manufacturing data that shows the lowest expansion in last 2 years. All the other economic data that came in from US, Japan, UK and European Union also were on the weaker side, and that led to some safe haven buying in precious metals also. And then it is a slew of Fed policymakers making statements this week. That is what the markets will watch out for. You also have the US non-farm payroll data coming in on Friday. That would give you a further direction as well. But at this point in time, it's a 2-month highs that we are trading on in sense of gold and a 3-month highs for silver as well. Markets do believe that from here on, because we're looking smarter on charts now at around $1,700 per ounce, the rest of the week could also see some more buying coming in. The whole difference really is between where the gold is trading in dollar terms and rupee. Because of the rupee depreciation, there are better investment returns that Indian investors clearly have seen. So when you look at YTD gold in dollar terms, we have seen a decline of 7%, but in Indian terms, a 4% of a jump up is what you've seen in investment. Same is the case with silver, a decline of 11% in dollar terms, but we're down just about 2% when you look at the rupee terms there.
Thank you very much, Manisha, for that. Let's move on now. The insurance sector is preparing itself for what could be the biggest reform in days to come. The insurance regulator is set to operationalize Bima Sugam. Yash Jain is joining in to tell us all about this and how it will work. Yash?
The two-letter word Bima Sugam could actually prove to be the biggest reform in the insurance sector in the days to come. The insurance regulator has asked insurance companies to operationalize Bima Sugam by January 2023. But what is Bima Sugam? Think of it as an Amazon-like platform where all life and general insurance policies will be listed. Bima Sugam will be responsible for sale, servicing and claims coming from these insurance policies. Who can buy insurance policies from Bima Sugam? Aggregators like Policy Bazaar, brokers, banks, insurance agents act as facilitators or bridge in terms of selling insurance policies through Bima Sugam to individuals. What's the best part? You as an individual can also buy your life, motor or health insurance policy through Bima Sugam. Now, who gets the funds to start Bima Sugam and who owns this platform? Bima Sugam will need approximately 85 crore rupees as initial capital. Insurance companies are expected to be major shareholders of this insurance platform. So initially, some general insurance companies will hold about 30% stake in Bima Sugam and another 30% will be held by some life insurance companies. A list of some of these general and life insurance companies you'd be able to see on your screen. Now, as more funds are required for the operations of Bima Sugam, more insurance companies will be roped in as investors. Now, the most important part, what's in it for you, me and many other policyholders? Bima Sugam is expected to significantly reduce commission paid by insurance companies. How? Let's look at life insurance sector. Life insurance companies pay around 21 to 45% commission on the sale of their policies depending on the policy term. Assuming that an individual buys a 10-year insurance saving policy, if the premium charged on this policy is about 100 rupees, then the commission included in this 100 rupees would be around 30 rupees, which would be paid by the life insurance company to the insurance agent, aggregator or the broker. This would leave the life insurance company with just 70 rupees to invest and give returns to the policyholder as his policy matures. Now, the commission on Bima Sugam could come down to just about 5% as compared to the earlier 30%, leaving the insurance company with much larger sum to invest on behalf of the policyholder. On a term insurance policy, with the same calculation, straight discount could be given on the premium to the same policyholder. Now let's look at the general insurance space. If on a motor or a health insurance policy, a general insurance company pays a total commission of 19%, Bima Sugam could bring down that commission to just about 5%. What could that look like? If the motor or the health insurance policy through an agent, broker or an aggregator comes to a premium of about 100 rupees, then the same policy through Bima Sugam would actually come to you at a premium of just about 85 rupees.
Yash, thank you very much for so comprehensively explaining that. Need to get